Good morning, everybody. This is the option selling call, and it is February 9th, 2021. And we're just going to go through a couple of ideas here. We are looking at the TradingView screener, which allows us to mark our stocks. That's the red boxes here. And then choose whether we use a weekly or daily or any other type of interval. As we know, the weekly chart is the one that gives us the best signals for selling options. And I just want to look at some put selling opportunities that might be out there. First one we're going to look at is Merck. Merck has been getting beat up since its trial for COVID vaccine failed, and now they're moving into therapeutics. I don't have a lot to say about that because I think there's a lot of unknowns. But I think that if you're a believer in Merck, if you think that they're going to be a good long-term company, that you want to collect that dividend and then have the upside of any potential blockbusters, I think that's a viable idea. So we are at the top of what I would consider the buy range if one were so inclined to go after Merck. This area right in here, 65, 66, where it bottomed on the COVID crash, it's probably a pretty viable area. Although you have to take a look at going back to 2018, that it could get down to the mid 50s. So if you are a deep value investor and you only want to buy things near bottom fishing prices, you can't really get involved with Merck yet. You'd want to see it in the middle to lower 50s first. However, if you like the thesis that I laid out a second ago, you collect the dividend, and then you take part in any future blockbusters, then you're getting to that stage now from mid 70s to mid 60s where you can start taking a look at it. So let's take a look at a cash secured put that you can sell on Merck. The March 75, which is right about where it's priced right now, it's 274. Pull up your handy dandy calculator. Say, well, 274 divided by 75. It gives me about a 3.5% return for holding this put for the next 5 weeks or so. Well, that gives you about 10 periods in the year. So you're looking at a 30-something percent annualized gain. And that's usually the range we want to be in. So you have to ask, how badly would you want Merck at 75 minus about 275? So a net cost of $72.25. Well, you take a look at the chart and you say, well, that's not bad, right? It's below this fib line, which is 74.32, and closing on in this fib line, which overlaps here, of about 66. So a net cost of $72 is not bad. I don't think it's what I'm looking for. I think I would really like to see the price come further down. But, I mean, this has acted as support 3 times or 2 times and could act as support again. So if you wanted to just start the nibble process, I think start the nibble process by selling a cash secured put on Merck. That March 75, get your net cost at 72 and change. And I think that if it does go down to 66, then you probably sell another cash secured put if it gets down to 66 to either get more shares cheaper, or what would be likely to happen down here is then you probably would get a rally, is you just be collecting premium that even though it doesn't technically impact your cost basis for tax purposes, it does defray your cost in Merck because you'd be collecting more premium if you wrote a second cash secured put in a month or two should the price go lower. One of our favorite stocks here, I just saw it a second ago, Lockheed Martin. You start to go, it seems to have bounced off. How's that for nailing a buy zone? Remember last week I said if you really wanted to nibble on it, you could. Look at that. Bounced right off of that buy zone line. These boxes that I do are pretty good usually. So when you get to here, this top line, just like on Merck a second ago, you might want to sell that first cash secured put. And again, just a small scaling in position, but it's something that you could do. Now, I don't know if you're going to see much more than choppiness here. I guess that's probably what's going to go on. I'm still not inclined to get too involved with Lockheed Martin. I can still buy the ETF. When I take a look at this, it is a higher low. So that could, mark an intermediate term low. But remember, we still have to go back to 2016 where most of this started and ask yourself the question, is profitability that much different here versus here? And the answer is no. The profitability is not much different. So take a look at this and ask yourself the question, how involved do I want to be with Lockheed Martin? Well, Lockheed Martin's, I'd say, a top 10 stock in the world. So you can do worse things than trying to get involved with Lockheed Martin. So if you have a big enough account, you can take a look at that $340 put, 1280. Okay, and so another one where you're going to have a return somewhere in the 30% annualized for about a 5-week hold. You'd end up with a net cost of about 327-ish. Take a look at your chart and you start going, well, that's, not a bad price. This really has been harder to deal with lately. I'm not sure what they updated. All right, so there you go. Make that a little easier to see. You see that this fib level is right around 320-ish, a little above. So I don't think that's a horrible put to sell if you're trying to get the stock. My guess was that it's hitting a fib level right now. You probably see it come back down to this level. So my inclination would be to wait till it's back to around 320, and then at that point maybe write a 320 or a 310 put on that one. Keep going down the list here. Bunch of stocks that people could be interested in. Bruce Lemire, I'm not real interested in that one. GameStop back down to $50 a share. There you go. Kinder Morgan. Now you could be making a living on Kinder Morgan. I mean, talk about an easy way to grind out 10 or 15% a year. And that big fat dividend, just keep selling puts on this baby. So this will be another one that goes into the new article format. I'll show you that in a second. Yeah, sell another 14, 0.39. Oops, that's all I wanted. 0.39 divided by 14. Yeah, again, figure about 5 weeks. So that's about 10 periods in the year. Just a quick way to do the annualized math. You're looking at an annualized return of like 27, 28% if you sell a put on Kinder Morgan right now. You could do this every single month. Just keep pounding this out. It's in this bottom trending trading range before it goes on some sort of strategic transaction in the future. And you should have got a hint that I'm right on the money on that. Exxon last week, the news came out that they had been looking at a merger with Chevron. Lots more mergers to come in the fossil fuel space. And again, the gas pipelines are the only ones with any real long-term residual value. So that's the safest spot to be if you want to have a little exposure to fossil fuels. Rockwell, it's not often that we see Rockwell oversold. Huh? It's not even oversold. See how quick we got out of the oversolds? It's almost nothing oversold. Let's flip this around then. Look at how many are overbought. Again, I think it's probably just time to part ways with Invesco. But if you wanted to sell some Invesco and write a covered call on the rest, we'll take a look at doing that. Let's go back to Rockwell here for a second. That's not really overbought or oversold. It's nothing. It's in the middle. So we don't want to deal with that. Yeah, Invesco. I'd probably just be blowing out of Invesco here. But if you wanted to write a covered call on part of your position, certainly worth thinking about. The March 23, you get $1. That's about a 50% annualized return. I think that's a real good one. Sell that Invesco March 23. So I'm going to write that in my notes. That's one that's going on there. Again, I'll tell you what, learn how to use this TradingView screener. The trick was you take your watch list and you bookmark them, and then they show up here, and then you can sort by the tickers that are bookmarked. Those will come up first. Kohls, if you own it, look at that. Wasn't this thing single digits in the spring? Almost. Got down to 10. I know Kohls inside and out. It's another one that you probably want to take profits on. Retrace. Could run to about 50, mid-50s. So on KSS, if anybody owns that, and I know some people did for the dividend, and then the dividend went away. I don't even know if they've reinstated it yet. I can't imagine. 55, you get 230. 230 into 55 is about 4%, right? Yeah, huge return. So 4% times, again, about 10 periods in the year, get an annualized return around 40-some%. Sell the 55. I think it's a pretty good deal there. If you get called away at 55, that coincides with this fib area here. I mean, this is pretty heavy resistance right here. See how it couldn't get through here? Once it came down, bounced back up. So it gets to this fib line, this 0.5 fib line. That's about as good as I think you're going to get a 60-ish. Then it'll come back down. And I'll tell you, Kohls has problems. So I'd be careful with Kohls. That's only something you buy in the giant dips. Broadcom, I mean, who's got 100 shares of Broadcom? If you do, this is probably something you just sell a couple shares of. Same thing with Palo Alto. Micron, overbought, probably overvalued, but it's in this rally with semiconductors. There's going to be an epic crash in semiconductors once the supply issues are worked out. Look at that. It's getting to a big resistance level here. I think you should be selling a good hunk of your Micron, but if you're going to hold some of it, I think that covered call, probably the $85 covered call, is probably something to do. So those 360, 85, again, 40-some odd percent annualized return. Yeah, there you go. There's a covered call to sell. You go right down this list and look at how many of these are overbought on the weekly. Then look at how many are close. And the number of close is huge. We still have 80 to 90% of stocks. I have to check the exact number right now. They're over their 200-day moving average. That is remarkably unusual. We've got some analysts saying that doesn't usually mark a top when it's that broad-based. Yes and no. When the small caps rally too, usually that marks, close to the end. But we've been setting records just across the board for all sorts of market breadth, overbought signals. There's just so much money out there floating around that, until the Fed and the Treasury decide to rein it in a little bit, the market's going to probably do well. And they really want to see inflation. They really want to see an event at some point. And the event that the government wants to see is another bit of crisis so they can go out and print more money. So just understand that there will be another sharp correction that will be met with more monetary policy. And you want to try to play both sides of it. Now, the worst thing you can do is panic sell at the bottom, because clearly getting back in is always hard psychologically. So if you're going to make a mistake, the mistake to make is just to hold all the way through, because the next round of money will be just as big as the last round of money. I have no doubt in my mind that's all that we're going to see until there's an epic collapse. And again, I don't know that we're in line for an epic collapse before the middle to late 2020s, 2030, somewhere in there. All right, any questions? Anything that you hold that you want to take a look at? What about WBA? So I've always thought that this was a reasonable stock to get involved with. It got down into my buy zone again, just for a hot minute. And I do think that you're going to see a strategic transaction with them, right? There's already been an attempt to buy them out. This stock could run all the way to 60 pretty quick. So this area right here, right, 44, looks like some support. So is there a cash secured put that you can sell on Walgreens that's of any value? There's nothing out there. There's no option trades on Walgreens. But if you wanted to try to ride this up a little higher for a few more weeks, you could certainly do it. But this was the breakout right in here. This is what you had to have been paying attention to. It got down into the buy zone box. It was very clear, had your big volume, and now you're going to start running into resistance up through 60. Now, can it break out through there? Maybe. It would have to, as COVID vaccines ran out, the business idea is that having all those people in Walgreens is they make those impulse purchases or they make their other purchases. And Walgreens ain't cheap. So when you buy that candy bar there, or you buy the batteries there, whatever it is you buy there, you're paying for it. Honestly, I think the Walgreens model in general is a little bit broken. they have to find ways of making money in healthcare. I'm not sure if they're going to be able to pull it off. It's just tough. How many of you been in a Walgreens or a CVS lately? And I'm not talking about going through the drive-thru. I'm talking about you go into the store and then you buy something that you didn't intend to buy. Yeah, somebody says that Lumen Technologies. Yeah, this is another one. Just keep pounding out, selling puts on Lumen Technologies. We have some that are about to expire. I just think you just keep on selling puts there. How's that for calling my shot? Let's see. We'll see if it gets there. I think Ford is on a run to 20. When it gets towards 20, we're gonna have to think about what to do. But if they get momentum from the millennials, and remember, go look on Reddit. Yesterday's article. I talk about. I mentioned Reddit. Yeah, had them on here. So Ford, I think you're probably going to get to ride that one to 20. There's not much to do until then. I hope that you've bought it somewhere in here. We've been talking about it for a while. And I really started talking about it at CES. And we got the gift of COVID, right? Oh, that horrible. So it's breaking out, baby. Ford is breaking out. I think you're going to see it get to 20. Might even be this year. We'll see. I'm curious to see what they do with the tax code during this reconciliation process. If they're going to change capital gains taxes, take away the deduction or the special rate on capital gains if you're making a certain amount of money. They should. I mean, people making a 7 figures shouldn't get a special capital gains rate. So we'll see. All right, take it easy, everybody. I'll get this new article up with some option picks. And I looked at the SPACs from yesterday, with the exception of MP Materials, right, which is one that I talked about yesterday. Daily chart. There you go. Came down a little bit today. Sell those $30 cash secured puts on MP Materials. This is just going to keep squeezing until it jumps out. And it's a Shamath stock. I mean, there's a possibility it breaks down. Do you really think the Redditors are going to let Shamath stock go down? I don't. I think this is one that, it's just going to keep squeezing in here and it's going to blast out of here. So I really, really think. How high can this one go? About a 10 million valuation. That would take it to about 60. There you go. That's what's coming. It's going to break out and go to about 60. So if you can sell those March $30 puts, there you go. This one, 360. That's even better. I have to do a quick edit. All right. So if you sell the puts on MP Materials, $30 for March, get 360, about a 12% return, annualized, multiply by about 10, right? Because there's about 10 periods left, 5-week periods left in the year. And that's a huge return, triple-digit return. Sell those puts. And you'd have a net cost $26.40. That's awfully good, right? It's right at that fib level. I think the best you're going to do on this one is low 20s. So if it does come down here all the way to 30, then you probably sell a second batch cash secured puts. And I went through the whole thesis on this company in the weekly Stocks of the Week call. All right. Have a good rest of the day. I'll get this article fired out in the next hour or so.